Hello and welcome to Stocks in Focus. You're watching BQ Prime, and this show is all about mid-cap and small-cap companies that have been good growth drivers as well. Joining us on the show, and one company that is in focus is Kei Industries. In fact, the long-term cable demand in India is something that we are focusing on. The aggressive build-up that we are seeing in terms of where renewable energy goes, that is something that could be one of the beneficiaries as well as the government-led infra spending on non-power sectors and the kind of pickup that we're expecting in the private capex led by the Make in India push are going to be our focus topic points as well. One company that will be a key beneficiary is Kei Industries. And joining us on the show to discuss more is Mr. Anil Gupta, Chairman and MD at Kei Industries. Good morning and welcome to the show, Mr. Gupta.
Thank you. Thank you for inviting me.
Always a pleasure to speak to you. Mr. Gupta, my first question coming to you is overall, we have seen good improvement in terms of the stock price performance as well from a YTD basis for Kei Industries. Clearly from here on, what is the strategy of the company specifically from a demand perspective, taking into consideration the renewable energy capacities that we're looking at, the government-led infra spends on the non-power sectors, the Make in India push, as well as the real estate growth story in India?
Yeah, thank you. As I have been saying, we are very bullish on the long-term cable demand in India. Apart from meeting the demand in India, there are substantial opportunities for exports which are also coming up, even from the developed countries. As you said that there is a substantial uptake in demand from India's power sector, especially from solar developers and power transmission and distribution sector. Apart from that, government push on non-power infra like metros, railways, highways, which leads to undergrounding of cables, and a lot of construction activities in the hospitals and commercial space and real estate activities. These are leading to sustained demand of cables in the country. We are also seeing a good amount of activity in the industrial sector like oil and gas, petrochemicals, cement, steel, and also the private capex coming up in the various other industries, which also leads to improved and continued demand for cables. Besides this, we are seeing a good traction of demand from many European countries, USA, and other African and Middle East countries for cables from India. It is definitely has something to do with the China +1 policy, but also we are able to get quality certification from different countries for enabling us to export in that country. So the certifications are very critical and important to export to any country, be it US, be it Europe, or even in Middle East. Certification as well as the pre-qualification and the successful track record in the similar industry.
Right. So, Mr. Gupta, a lot of growth drivers that you as a company are looking out for as well. Now, from a business perspective, if we have to look at FY13 to FY23, we have seen a Kei Industries which has seen a CAGR growth of around 15%, right? Now, taking the next, say, 5 to 10 years into consideration, with all of these demand drivers in place and say execution goes on time and on track, what's the kind of growth you're anticipating from the company?
In the last 5 to 6 years, our CAGR growth has been 17 to 18%, except the COVID year of 2021. And then in 21-22, we quickly recovered back to a normal level. We are estimating a growth of 17 to 18% CAGR for next 7 to 8 years, and we don't see. I may be on the conservative side. Our strategy is to increase our demand, our product demand from India as well as from other geographies. And to do that, we are also building up new capacities in the existing plants as well as the new greenfield plants.
Right. So when you talk about, looking at growing business in the domestic market as well as the export market, if you have to look at it from a margin perspective, between the domestic as well as the export business, which is more margin accretive, number one, and two, do you see that business increasing as a percentage of revenues?
Yes, export business will continue to increase as a percentage of total revenue, and we could see a jump to 15 to 20% in the export revenue of the total revenue. Secondly, the margin, we see a margin of, similar level of margins around 11% level from the export markets. Because we also have to spend a lot in developing those markets, in certifications, and also, we have to pay marketing expenses in those countries in terms of agent commissions, etc. So that is one. And you see, we also have to give some competitiveness when we enter into a new market vis-a-vis the existing players. So that is why I'm saying in a conservative way that 11% margin and on an overall basis is and even going forward bettering this over a period of next to 3-4 years will be our aim.
Right. So taking this growth into consideration now, overall, which are the segments of business that will be growth drivers? And specifically from a CapEx perspective, where are you spending?
The growth drivers will be, as I said, that the power and infrastructure and the private CapEx and the industrial units which are coming up, which will be needing substantial amount of cables. Secondly, we are doing a CapEx of close to 100 crore rupees in our existing plants in this financial year, and also launched a greenfield project at Sanand near Ahmedabad, which will entail an investment of close to 1,000 crore over next 2 to 3 years period. So we will be able to build up a capacity which is almost 60 to 70% more from the current level, maybe, which I say that close to 14 to 15,000 crore over next 3 to 4 years, from current level of around 8,500 to 9,000 crore.
Right. And in terms of the new facility, how do you see the asset turn?
Initially, the asset turn will be around 4 times, but gradually it will go up to 5 to 6 times over next 2 years period after commencing the production. Because after commencing, we'll have to see what are the bottleneck points and where the rebalancing is required, and which is done quickly to get better asset turn.
Right. From a marketing and sales perspective, you have been increasing your dealers and distribution network on a yearly basis, right? You have added electricians as well now to your royalty program. With that, usually when it comes to export markets, clearly the cables are exported directly to suppliers. However, you did have plans with regards to, getting distributors in the US. What is the strategy looking like? And is that something which will actually eat into the margins then?
Normally, in many cases, business in United States is done through distributors. So that is the way that market works. So it does not mean that it will eat into our margins, because either we are selling to the end customer or to the distributor. In case of end customers, we have to shell out some commission to the agents who are working for us, and in case of distributors, we have to pay some margin to the distributors. So what margin percentage I said, it is irrespective of whether we are selling directly or through the distributors. It will, from distributor standpoint point of view, we can fetch better price from the customer because they get just-in-time delivery, and also they have to pay after getting the goods which are received there. In case of direct supplies, sometimes they will have to pay even before the goods reaches there. So that is the differential in dealing in both these manners.
Right. And I'll just come back to the capex plan of it. Last, I think when we had spoken was that in FY24, with regards to Silvassa, it was a brownfield capex of 45 crores. And another one in terms of Bhiwandi, which was 110 crores, right? What is the status of the same?
In Silvassa, this capex should be over by December. And in Bhiwadi, it should be over by March or April 2024.
Okay. And what's the kind of revenue generation opportunity you see on the back of this capex?
We expect a revenue generation of close to 1,000 crore from this capex.
Right. And very lastly, if you see in terms of overall opportunities as well that the company is looking at, how long do you think will this cable demand continue to benefit specifically from real estate as a space? Because almost 20-23% of your revenues do come in from that space. How are you seeing that trajectory?
See, we can see that in India, at the moment, the penetration of real estate among large population is low. People needs houses, and the people who have smaller houses, they are moving to the bigger houses. So we, in a growing economy like India, I think this demand should continue to grow for next 25 years. I mean, always in a economy, sometimes 1 or 2 years bad patches comes. We do not know when it comes. But on a long-term perspective, I don't think it will stop, because there are aspirations of the people in getting and living in the good houses, their own houses, and with the banks extending good amount of home loans with very low rate of interest, every person in the middle income group or low income group, they wants to go to their own houses, and definitely even the people are building up even for the rentals also, but demand for the own houses as a concept is growing in India.
Right. So I think that will continue to be a growth driver as well. Thank you, Mr. Gupta, so much for joining us on the show and speaking to us with regards to what the industry is looking like as well, and what could be growth drivers, what investors could expect from a KEI Industries. So that's the management of KEI Industries. And clearly, if you see from a stock price perspective as well, a 60+% returns is what investors have seen in the last on the YTD basis. But moving on the other side, we will be joined by the management of Som Distilleries to tell us what is stacking up in terms of from the demand perspective, as we have the festive season, which is already started, and a lot of events that are happening in the Indian market from the World Cup 2023 as well. So lots in store to discuss with Som Distilleries to understand what the consumption trends could be looking like for players like them. Welcome back. You're watching Stocks to Watch, and the key stock that is in focus today as the second part is Som Distilleries. We are already in the midst of the festive season. We have a lot of events that are lined up as well, out of which Som Distilleries could be one of the key beneficiaries as well in terms of the second half of FY24. Clearly, the beer industry also has remained slightly flattish between FY16 to FY22. But the growth that we've seen in FY23 has been really healthy for the industry as well. Let's understand from the management as well as to what's in store. Mr. JK Arora joins in. Good morning and welcome to the show, Mr. Arora.
Good morning to you.
Mr. Arora, my first question coming to you is overall from an industry perspective. Clearly, we had a lot of reasons during COVID, etc., due to which the overall growth in terms of FY16 to 22 actually remained flattish, and a good recovery that has come in terms of FY23 as a whole. What's the sense that you pick up if you have to divide it between the beer industry as well as Indian-made foreign liquor?
Uh, you see, the growth is in the both sectors, in the beer and IMFL. There is no to it. Especially, after COVID. COVID, we all have been in a very bad shape, as you all know. Everything's it. But after COVID, there is a lot of benefit to this. Is the industries which has affected most in the COVID, like aviation, tourism, hospitality, liquor. All these sectors have affected most. And after COVID, these are the sectors which got the most benefit as well. Now you see aviation, hotel, tourism, all is doing very, very well. Similarly, liquor has also started doing it. Actually, the whole thing behind this is the attitude of people now. Now people have started spending more, enjoying more. As if there is no tomorrow. Now the earlier thought of that more savings and less spending probably has little bit changed. That people are more into this thing. So that has benefited the liquor sector more. IMFL got less advantage because state governments are very, I would say, greedy about their revenue, and so they put more taxation on IMFL liquor, and beer is comparatively having more benefit because for society as well, it is if you have a lighter drink, and especially youngsters, so this is in the advantage, and they have realized, state governments have, if you have a reasonable taxation on beer, the revenue is more for them. Their income goes proportionately more up in comparison to IMFL than in the beer. So that is the one reason that the beer industry got the most benefit of.
Right. So overall, taking FY23 into consideration, we've seen, at least for the beer industry, double-digit growth coming in for the industry. How is FY24 according to you looking like? And in terms of the gains that Som industry, Som will actually see out of it?
You see, we are quite optimistic. We at present, we are present at a very limited space in the all India business, and 35-40% is the total all India where we are present. But wherever we are doing pretty well. Good. If you look at, there is 4 large companies in the sector, in the beer sector. UB is of course leader with the major market share. UB with Heineken, and another company InBev with Budweiser. This thing, and third is Carlsberg, a company from Sweden. So, if you think of a 4th company, you have the name of the Som in mind only. Som has emerged as the fastest growing beer company in the last 2-3 years, and primarily because of the reason that our brands have been accepted very well wherever in which. So, out of these 4 companies, whichever the markets we are present, we are practically in a number 2 position everywhere. So we are quite optimistic, and we have got a major plans for the markets which are still uncovered. I would say there are still 7-8 markets which are having a very large potentials. Markets like Maharashtra, Rajasthan, UP, Telangana, Andhra, Tamil Nadu. These are the markets which are having a very large potential, and these are all, 20 million cases plus market. So the 20, not 20, I would say 30 million cases market. So these are the markets which are uncovered, and we have a plans to enter in these markets. So we are quite optimistic about it.
Right. So, Mr. Arora, what is going to be the strategy to enter these markets? By when do we see that happening? And two, will we look at capacity expansion as well to enter these markets, or the current capacity will suffice?
No, current capacity is absolutely not.
Hmm.
We are already using 100% capacity in Madhya Pradesh. We are using more than 100%, 105 to 110% in the Karnataka. Odisha, we have just expanded. We have only completed the expansion in July, so which is also doing more than 50% market. And we had the tie-up arrangement with the Carlsberg there. So with their consumption and our, I think we are going to use this year the 100% capacity in the Odisha as well. So we do not have anything surplus in hand with this. So we have to have. There are 2-3 ways to enter into the new market. One is that you get it locally made from the manufacturers there. That is one. Another is you lease some capacity or supply from your existing units. So, but the problem is that any state you enter in, and if you bring these stocks from another state, they put some import tax, and the state from where you supply to the another state, they also put some export tax. So these import and import tax put together, that dilutes the margin.
Hmm.
About 4, 5, 6% EBITDA goes into this. So the best thing is to have the local production. This local production, either you get it made by investing your money into the units over there. So, of course, that is also a major investment. So, because you have to pay the upfront taxes to the government, payment in advance, and raw material, packaging material, all you have to. But the manufacturer only charges you the bottling charges, and then you can make it.
Right.
If you
So,
give
what
it
is
to
going to be
if
your strategy to enter these markets?
we have a definite plan to have an acquisition or a greenfield. Like
Hmm.
UP, we are planning to be a greenfield unit there. This thing, UP alone, if you look at the market, which is the 6th largest country in the world, so we are still not able to tape it properly because of the stocks availability. So UP, we are planning to be a greenfield. We have a few units on our radar for acquisition. So we have a definite plan to acquire units in the uncovered markets. So to have a additional capacity. So that's how we are going to proceed.
Right. And these acquisitions that you're looking at in strategic markets, will that be done through internal accruals, or will we look at raising debt?
You see, we have got a lot of surplus accruals. This year, in fact, we have reduced our debt also. Last year, we had about 250 crores debt. This year, we have reduced about 100 crore debt from this thing. We have brought down it to about 150 crores. So, because of the internal accruals, so despite the fact that we have done a expansions in the all 3 units this year, this thing that all that expansion has been took place by the internal accruals only. We have got quite a good surplus accruals, and we are also having a QIP due in this month only. We are having about 350 crores QIP due by the end of this month. So we hope to be get a good response from the market as we are feeling as of now. So so I think organizing money capital should not be a problem.
Right. And overall, if you see in terms of the raw material price trend, how is that looking like? Because clearly the prices have increased. To my understanding, companies have taken a price hike in the month of May last. Any updates on that as to what's the trend looking like?
You see, there are two aspects, two dimensions of it. Last year, if you look at because of the Ukraine war, their situation was really bad. There were two major reasons. We have got two major raw material, packing material involved in our business. One is malt, which was to come in a very, very large quantity from Ukraine. So because of the Ukraine war, that got affected. And this was for a raw material. For packaging material, our major packing material is bottles. So bottles last year, there is a company called Hindustan National Glass, which is producing about 70% glass bottles of the beer industry in the country. They went into NCLT. So that was a lot of problem last year. But this year, Ukraine is also settled, and the glass industry have also increased their capacities. So prices have actually, in fact, little bit come down. It is not increasing this year. One thing, and price increase what we have taken last year because of this situation. That since this will come down, so profitability will go up this year. It is not that's another dimension which I was talking to you is the utilization of the capacity. You see, despite so much of difficulty in the prices, our profit has gone up this year, precisely for the reason of the utilization of the capacity. That 100% utilization of the capacity has brought down the cost substantially. That is how our EBITDA from COVID period for the 9 crore loss to we have gone to the 60 crores profit. This year is going to be much more than the 60 crores because of this. So situation has become better, I would say, rather than last year. It's nothing to worry.
Right. And overall, Som has sold around nearly 15 million cases in FY23. How much do you think will the company do in FY24, and what's the next milestone? Taking the additional capacities, acquisitions into consideration, how much do you think you will be able to do?
Very great question. So let me tell you this thing. Presently, the market is of about 37 crore cases, about 370 million cases of the all India. And this year is going to be maybe this financial year is going to touch about 400 million cases. Whichever market we are present at present, our market share is of about 12%. If we look at the large perspective, say 5-7 years down the line from now, this 400 million cases market is going to be at least 700 to 800 million cases in next 5-6 years. And having our 20%, assuming our 20% market share in all India, we can easily reach to we will be about a 10,000 crore company easily. So from 1,000 crores this year, we can hope to be in the next 5-6 years about a 10,000 crore company. And as far as quantity is concerned, this year it's about 15 million cases, and you can imagine out of 20% share in the out of 700 million cases, about 10 times more from here, this 1.5 to about 15 million cases.
Right. So I think that's going to be looking Very strong from here on. Thank you, Mr. Arora, so much for joining us on the show and sharing the views and taking into consideration that it is the festive season as well as you have the World Cup as well. It is going to be great with regards to consumption companies like yours as well. So that was the management of Som Distilleries, clearly giving us a trend of what the industry is looking like, not only for Som Distilleries, but as a whole, and how Som Distilleries could be benefiting out of the same as well. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.